I already heard that you were like, you became Bitcoin maxi in 2019, I think, in your own words.
Yeah, I've slowly transitioned over to a maxi.
Yeah. And why is that?
Because I've played in the shitcoin rabbit hole before. I got started with Ethereum, and I was there when Ethereum split into Ethereum Classic, and I was on the Ethereum Classic side. I was like, what the hell is going on? I've seen too many scams. No, Bitcoin is easy, predictable, and highly commoditized. Right, so I don't have to play with any sort of random games.
To stay safe, basically, to keep it,
It's more safe.
Absolutely.
It's more safe.
And is this from a mining perspective, or was this more from your own personal investment?
Both. From a mining perspective, it's definitely easier to be doing Bitcoin because with Ethereum or something else, they can just change the rules at any time. With Bitcoin, you know the rules, you know exactly when things are going to happen. The halving's predictable, difficulty adjustments are predictable, and nobody can say mining's done tomorrow. Right, so I can buy into a miner, I know I can run it for 4 or 5 years. I buy a GPU for Ethereum, maybe they cancel it tomorrow. You know,
like with the proof of stake.
So it's just a lot easier. It's a lot more predictable with the kind of capital that we have to invest to mine at scale. I can't take that risk. Like, it's just like I can't spend $100 million on miners for Doge. You know what I mean? And like
it's living on the edge.
It's too risky.
So, but the mining operations that you are handling, they are like big.
Yeah, it's big. We've been between 1% and 2% of the network for 5 years. So
in hash rate that you're delivering.
In hash rate, continuously. As the network scaled, we've scaled, and we've it's not consistent at 1.5 or 2 or 1, but you bounce between 1% and 2%.
It depends on, I think,
depending on deployment schedules and how everything grows. We're still there today. We're still continuing to grow, and we've maintained that market share for 5 years. We've got now roughly 62,000 individual Bitcoin miners plugged in on 11 sites in 4 countries. So it's a pretty sizey operation.
And it all started in your basement by mining Ether, and now it's
not this company. My first Bitcoin mining company, started in my apartment in Hong Kong. Went to my girlfriend's home in Taiwan, then to a factory in China, and then it's changed a lot.
So the start of your personal journey through mining was in China.
All in China.
For a long time, the absolute center of mining.
I was born and raised in Hong Kong. I speak Chinese. My wife is Chinese, so I have a little bit of an advantage there. But still, I'm a white guy in mainland China running a Bitcoin mine.
So
there are challenges associated with that. Trust me, if you can think of a challenge, I encountered it, and I no longer mine there for good reason.
I think the biggest challenge was May 21.
I was out of there at the end by October 2017. I was done with my own operation there. I'd done it at that point for 2.5 years, and it was no longer feasible to keep going there. So I walked away, and it turned out to be really good timing to walk away at the end of 2017 because just like 3 months later, everything was falling apart.
Falling apart, and I think especially for China, it became more and more difficult to run a mining operation there.
For sure.
And for now, it's practically impossible, I think, to do it.
It's absolutely. It was always been a little bit under the table, and it's absolutely still that way. It's still going on for sure.
But what does that mean for your current company? Like you can't mine there any longer. You have to explore the rest of the world. How do you come up with new locations that are, for a long term interesting?
I mean, as a miner, we can't control our revenue. All we can do is control our costs. And so the best way to do that is on the power side of things. We can obviously improve the energy efficiency by buying more highly efficient machines, but that really doesn't outweigh cheap power costs, right? The cheap power cost is the #1 driving factor. Bitcoin mining is really at its core, if you're looking at it from a business perspective, it's an economic incentive to monetize low-cost energy. And if you're going after, marginally high cost or average high cost energy, and you're doing it with high efficiency machines, it's a short-term strategy. We look for power costs that we know are going to be relatively stable over the 3 to 5 year medium term. We want them to be low cost, which for us is generally in the range of 3 to 4 cents per kilowatt hour. Okay, obviously the lower the better, but you can't find, it's very difficult to find good quality megawatts below 3 cents per kilowatt hour. It's very, very difficult to find electricity. Above 5 cents, very easy. But we find that too expensive. So we're really selective in our criteria. We first look at energy price. We look at predictability on the price. And we look at, how sustainable is that energy source, not only from, the environmental perspective, but more from that economic perspective. So we like energy sources like hydropower that are very underutilized, highly bureaucratic systems designed to provide an economic stimulus to the regions that they're in, by facilitating
really local.
Exactly. I mean, it's low cost energy is there to facilitate industry, and the creation of jobs and investment, and we look for areas like that. And so for us, we started in Quebec. We identified a similar market in Washington State. We grew, we acquired an operation there. We've identified another market, Paraguay, very similar. We're also in Argentina, which is slightly different because it's not hydroelectric, it's not gas, but Argentina has its own unique economic conditions that mean that the ability for the price of electricity and energy to go up there is highly constrained by the overall macro conditions that Argentina's in. So for that long-term visibility on price and cost effectiveness of the price, like Argentina does make sense, but it does so in a different way.
So that's like the quality of the megawatts that you're buying is what you just described. It has to be sustainable. You have to be sure that you can go on with it for a couple of years.
Absolutely.
That they don't throw up the prices in like a couple of months or something.
Correct.
And are there more places in the world where you are identifying these conditions?
We have a global view, and one of the beauties with Bitcoin is that you have the ability to go anywhere where the power is cost effective to do so. So we've looked around in Europe. Europe is a very difficult energy market right now. But there are parts of Europe where it can be attractive. Northern Finland, northern Norway have some interesting rates. Sweden has a number of good, attractive data centers. And my personal view is that as Europe continues to kind of dismantle its electricity infrastructure, what that's going to do is eventually those higher prices have to drive the industrial base out. They'll seek lower cost sources of energy somewhere else to manufacture whatever their goods. Like Mercedes can't build their plant based on 4-cent energy and then just say 30-cent energy is acceptable, from now on, right? They'll move someplace, they'll find someplace cheaper, and when that happens, you're gonna push away your entire industrial base. And similar to what we saw in the United States and Canada when they outsourced all that industrial base to China, now there's nobody using those megawatts. The price actually becomes cheaper. Then it becomes economically advantageous for a miner to come in because no other industry is going to come and invest in those megawatts anymore.
No, so they have like some leftover energy, a lot of leftover energy that nobody's going to buy.
Exactly. So I think long-term view, Germany is actually probably going to be a bigger place for Bitcoin mining because they specifically are increasing the price to drive out the industry, which will lower the demand, which will relatively make it cheap enough and scare everybody else away that only a Bitcoin miner is going to want to go in there.
So maybe Germany can be the new China in a couple of years?
We'll see. It used to have a lot of Bitcoin and Ethereum mining back in maybe 2015, 2016 kind of era. And it's largely all been forced out. But I think in 4, 5, 10 years time, it's going to be a very different place than it is today.
And except the price of the energy that you're buying is also like the sustainability or the environmental impact of it. Is that also a big issue for you guys? Are you? We've doing a lot with hydro energy?
We do a lot with hydro. We've done almost all hydro, with the exception of Argentina. Every Bitcoin we've ever mined is with hydro. So as a public company, we've mined over 21,000 Bitcoins just only with hydro. since we started operation. I don't know the exact number now. It's probably over 22,000.
Yeah.
But we've done a lot with hydro. That's an important part. But I think really the big reason why we like hydro is because it's also economically sustainable for those same reasons we talked about, right?
Yeah.
Once the power plant is built, it's constructed. There's no huge OpEx costs. The cost to keep that plant going and generate an additional kilowatt hour, megawatt hour is very marginal. You're looking at labor and some spare parts, maintenance.
Yeah.
It's very, very minimal. The biggest cost after you've paid off the dam is probably just parts.
Yeah. Just to keep it running.
And it becomes very, very cost effective. And so when those are generally constructed for heavy industry, which has been driven out by bad policy, that provides a space for Bitcoin miners to come in there and absorb that excess. And we've identified that situation numerous times, and there are plenty more situations where that will occur as well. And it'll also work out for new hydroelectric dam constructions. Like for instance, Ethiopia is a big subject of interest for a lot of people now because of the Grand Ethiopian Renaissance Dam. They're building one of the largest hydroelectric dams in the world there in Ethiopia, way more power than the country consumes now.
Yeah.
And with the idea to export that energy.
Yeah, it would be a great source of new income for the entire country.
Exactly. Who wants to go set up a manufacturing plant in Ethiopia?
Yeah.
I don't know anybody, but Bitcoin miners are a little bit more speculative, and they have faster payback periods. So they're able to recoup their investment really quickly and minimize the risk. Because once that equipment's paid back, you're almost playing with house money at that point, right?
Yeah.
You've acquired a cash flow that's already paid off, and now you have to understand what's best to do with it.
Yeah, and maybe the facilities are also like more. They are. How do you call it? It's possible to place there somewhere out of the town or out of the really inhabited areas. Maybe.
Yeah.
So that's an extra incentive for a Bitcoin miner to go to an area maybe like that. Yeah,
you should go remote.
Yeah.
I always say it doesn't make sense to be mining in areas like Manhattan because the relative demand versus supply is very high. For me, to get the low cost energy that I want, I don't want to compete with other buyers of that energy, right? So for me to reduce my competition, I have to go someplace so far out that nobody else is even there or wants to go there, and that's going to both improve my price and also improve the predictability of that price over the long term.
Because there's not much of a competitive market around that specifically part of energy inside the country.
Correct. There's a lot of cities that are built up on one company or one manufacturing plant, and the manufacturing plant goes away, the company leaves, and then that infrastructure is just sitting there. That town has lost a good source of their jobs. And Bitcoin mining is a very good vehicle for coming in there, facilitating investment, creating jobs, and creating the tax revenues for that local community.
Yeah, so that way you eliminate the risk of like getting too high prices in a short period of time. But are there other risks in the market right now?Maybe like the financial situation at Bitmain? For example, I'm not exactly sure what's happening there right now, but
a couple of rumors have come out, but right after that rumor came out, there were other reports that contradicted it. Who knows what's going on? Bitmain's been a large player in the space for a very long time. They still maintain 90% of the market share. I don't see that set to change anytime soon. So they're not going away, but certainly the market right now is, I think, a little bit tight. We've been in a downward trend for at least 15 months, longer probably, and it's been tight. I don't think anybody was really expecting, at least on the mining side. I think a lot of us don't really pay attention to things like Luna stablecoins and DeFi yields, and so I think that caught a lot of the mining community off guard, who said, in our models, okay, Bitcoin is 30 is a solid floor, and 25 is a solid floor, and 20 is like an absolute solid floor, and then 16. So No, there's been some adjustment to do. I think there's still going to be some adjustment, but Bitcoin mining is the freest market on the world. In the world, the hardware trades as a commodity, electricity is a commodity. The really only barrier to entry is capital and your ability to go out, secure megawatts, go out, secure and deploy miners. And so we react really quickly. If there is over-investment or over-leverage in the space, it tends to get wiped out pretty fast. Because it's
corrects itself.
It's unsustainable, and you know, the system has a way of flushing that out and recorrecting.
So that's maybe from when it's getting too much, it gets corrected. But right now, is it maybe too difficult to attract financial means as a company if you want to expand or something like that?
I'd say capital markets are much tighter right now. I mean, you know, at the beginning of 2021, capital markets were very open. Everybody was very excited. There was plenty of capital to go around. Everybody wanted in. I think now people are more in waiting to see kind of post-halving, where do they want to make their bets. And so I think right now, capital is really tight. At the same time, miner prices are pulling back in line with that, and you know, it requires less capital for the same amount of growth. And so there's a little bit of a give and take there. You know, surprisingly, or maybe unsurprisingly, capital always loves to flood in and when the prices are incredibly high, and it's the most risky time to buy the miners. And then, you know, when the price is down 90%, you know, all the capital is fled away. It's like, no, now might actually be the time where you want to start, you know, building back a position. You know, but sell high, buy low is time-tested strategy. You know.
But okay, so for now that's the situation. But what for the upcoming halving? What's that gonna do for the same situation? Like,
I mean,
the balance in the market is getting a lot different.
The miners have to adjust, right? And the reality is that it's pretty simple to calculate the cost to operate a miner. You've got the energy efficiency, and you've got your energy price. You multiply those two, and you get your gross cost to operate that miner on a daily basis. Obviously, you've got labor, overhead, G&A, all these other sorts of factors that you have to add on to it, which can make you, you know, significantly more expensive, or maybe only marginally more expensive to remain in operation. But you know, miners will have to look at that, and you know, from my perspective, we're around 6 cents a terahash for hash price now. If we go down to around 4.5 cents per terahash, miners are going to have to start turning off machines and underclocking, and so there will be a response from the market that will contract hash rate, which will see that market share back. And there's certainly a large percentage of the market that's operating at 6 cents, 6.5 cents, 7 cents, 7.5 cents. You know, there's a lot of people, especially on the hosting side, who sign very expensive agreements. And you know, those agreements they'll have to look at what they can do with. Are they able to get out early without penalties? Like, all those costs are going to have to be calculated in. But certainly the market will adjust. There will be a period probably where the hash rate pulls back. Prices stabilize and normalize. And I would think that there's also a decent amount of consolidation that takes place in maybe the 6 to 12 months post-halving from players who are over leveraged going into it, and from players who built up balance sheets in anticipation of that situation.
So that's would be a new flush out of the market in some way.
It happens every time.
But and for you guys, you're always like really strict on the buying price of the megawatts and stuff like that. So you're not in the category of 6, 7, maybe 8 cents.
No. Our average across all of our sites is about 4 cents. And we have some sites which are cheaper. Argentina is our cheapest site. It's around 3 cents. But we maintain a portfolio approach. So we have a portfolio of megawatts in a variety of jurisdictions with different electricity suppliers at different prices and different subject to different regulatory regimes. We also maintain a portfolio of miners from different manufacturers with different levels of efficiency, different operating costs, and that allows us to better manage our fleet kind of proactively over time. For example, we've got 12,000 or so M31S miners, and these are for us our least efficient miners. They're 44 watts per terahash, well below the industry average. But we bought these in 2020, and we bought these for teens per terahash. I went back and did the math about a month ago. These miners have paid themselves back 7-8 times over. And so
already,
already, and they're still generating free cash flow, right? And so, you know, we need to understand it's like, hey, look, timing is very important when you're getting into these moves. It's not just about efficiency. We bought them at the right place, right time, and we were able to run them for 3 years consistently with solid cash flows because our operating cost is low enough. Now, if we want to upgrade those, we can upgrade those. It'll be more cost effective to do so, and we can do so on a rolling basis where we don't have to upgrade all of our fleet at once. We don't have to be subject to massive capital requirements. Exactly. We're constantly scaling through and rotating through that portfolio, and it makes it easier to manage, and also gives our investors, I think, a better quality of exposure to the underlying.
Yeah, so even for a company your size, it's still efficient to let some old equipment
absolutely,
just to generate the cash flow.
They're still generating free cash flow. So now the miner has paid itself 8 times over before might pay itself off 9 times over. Okay, at that point, maybe it's a good time to sell it and make even more money by liquidating it and bringing in something new.
And what would be the parties buying that then afterward?
For the older miners, the older miners are actually really, I think, oversold. There's so much new miners out there in the market, and I think there's so many new players in the market. They don't understand all the different ways that you can play this game, and for anything that's kind of energy trading based or has a dynamic factor in the energy, a lot of these older miners are going to give you a much better return profile. So you can buy an old miner for a fraction of the price, maybe 20% of the capital expense of a brand new miner, and you'll get a much faster payback period on that cash flow, and you don't have to worry about incurring massive amounts of downtime with regards to your energy trading. And so there's a market for all sorts of different kind of miners, and you have to take a look at your energy and your strategies, and you have to say, am I trying to make the most amount of money per unit of energy, or am I trying to monetize the most units of energy? Right? If my goal is to make the most amount of money per unit of energy, I need a high efficiency miner. But if I'm a flare gas company, if I'm Chevron and I've got thousands of these wells and I'm burning off this gas, I want to monetize the most units of energy. And so I can monetize more units of energy for a fraction of the price with old miners. And if my marginal cost on that energy is effectively zero, then it doesn't matter if the miner is 5 years old. I mean, you could even run an S9, which is a 9-year-old miner at this point. You could run that in an oil and gas flare situation and still be profitable
like
today.
Energy, basically.
It's marginal cost. So used miners go to those kind of flare gas scenarios. They go to areas like Venezuela, where the energy price hasn't been properly priced into the bills that people get paid every month, or receive every month. So the used market is still there, and in some ways it can be really, really profitable to buy an old miner. But there's certain economic applications for it.
And then the current difficulty increments. Is that going to push it out of the market at some point?
It depends on your energy costs, right? So if you're in a situation where your marginal cost of energy is zero, there's no situation where you're not going to make money, operating that miner on a gross basis, right? And if your capital cost is low enough to buy it, you just it's cheaper to buy an S9 than to buy a load bank. And so a load bank is just a technology specifically just to waste energy, and you can buy this thing that generates some level of revenue out of it, performs the same function for a fraction of the price. There's always a scenario. You just need to look at your energy price inputs, how it's all structured, and then you can best allocate your capital towards different miners to get a better return profile.
So all over, it's getting like it already is, but it's getting a more and more serious part of the entire Bitcoin ecosystem. It's getting industry size already is.
Scaling.
But still, for a lot of people, I think that are like trading in Bitcoin or something, it's kind of an invisible part of it. But
for sure.
It feels far away. It's invisible, but it's really, really important.
It's it solves a problem in the electricity industry that they never thought they could solve.
No.
And we have a situation, you know, I think a lot of the biggest opponents against Bitcoin mining fundamentally don't understand that there's a difference between energy and electricity. And, you know, energy is its raw form. It still needs to be converted into electricity for it to be in a usable form that makes it convenient for humans to use for productive work. And when it's converted into electricity, it's not cost effective to store that energy. No. And that flow of electrons, in order to balance it with electricity, you always end up with a supply-demand curve where supply exceeds demand. If there's ever a situation where electricity demand exceeds electricity supply, you have a blackout or a brownout, you know, and you have issues, right? You have to have more supply than demand on the line. It's a built-in prerequisite of the system. And that gap, they've never understood, you know, there was a technology that could solve that problem. And now energy companies and electricity companies are really starting to understand, wait a minute, there's a kind of a dispatchable customer, a customer of last resort for this extra electricity. We're already generating it. We're already putting it on the line, regardless of whether or not anybody buys it or not. Those electrons are there, right? And so if you can consume it with an S9, you're better off than just letting it go back into the ground. And so these sorts of scenarios are starting to play itself out. I think that they're going to be really, really impactful on the energy side of things, and it's going to start getting integrated, just as several companies have already started to do on the energy trading side. It's going to start to get integrated into more and more energy infrastructure. And that's really going to change the aspect of how people look at Bitcoin mining. It's not just going to be a data center now. It's going to be an integral part of electricity grids.
It solves another kind of invisible problem. Like Bitcoin on itself, it solves a more economical problem, but in the background, problems like this.
Oh, for sure. It's because it creates an economic incentive, right, for the correct moral behavior.
Okay, well, thanks. So, in short, Bitcoin solves even more problems than we already thought it did.
It solves all the problems.
Solves it all.
Fix the money, fix the world.
Thank you. That's a perfect.
That was good.
Okay,
perfect, great.
Thank you. Really cool. Yeah, it's like I said, like the mining industry for a lot of people, it's completely invisible, but it's
really big. It's really big, and it's getting bigger and bigger. You know, most people just read headlines in Wall Street Journal. Hey, we consume as much energy as Argentina, and they have no idea what the hell that means. They just think, you know, hey, I read a headline. The headline's bad. That's what I should think. I'm going to repeat what the headline says, and it's really frustrating. Like, people understand that the electricity curve of countries is exponential, right? It's like China, China, US, and it just like keeps going down with Russia and Canada, and it just keeps scrolling down exponentially. By the time you get down to Argentina, we're like a fraction of 1%, you know? And so they make it sound like, hey, it's a G20, it's consuming like probably 10% of the world's electricity. No, it's like 0.1%. You know, it's so small, and they don't understand how electricity works, they don't understand how energy works. You know, most grids lose anywhere between 10 and 20% on distribution transmission. And when you understand that economic incentive is there to monetize that gap, it's like, wait a minute.
Then it's
so now we're at 0.1%, and we waste between 10 and 20%. And this is an economic incentive to reduce that waste. So now we can grow from 0.1% to 10 to 20% of the world's electricity without actually generating another watt of electricity. Like, it really changes the game. We could do that without one extra, unit of carbon being emitted or one extra watt being generated, just by monetizing that gap.
It could even,
massive room for growth.
Yeah, and if you like the heat the miners produce, you could maybe use it. I think there's a pilot running inside the Netherlands right now. They use it in a greenhouse.
I think with Hive blockchain. There's a few companies who are doing those sorts of things. The heat recovery is going to be a big aspect.
Yeah, that's an extra incentive and an extra usability that wasted energy is going to get.
For sure.
So that's
there's even technologies where you might be able to recapture that heat, run another boiler or organ ranking cycle generator, and convert it back into electricity.
to a miner that's getting... And then you get an infinite circle of free energy.
Eventually, you know, it's gonna go to zero. But yeah, no, you could recycle some of that electricity.
It's nearly like the cat generator with 2 slices of bread, you know, on each side. And
yeah, exactly. It's running itself.
Running, yeah, definitely. Yeah. So it would be the perfect solution. Well, thanks. Thank you very much.
Yeah, no problem.